We are experiencing the biggest rally for short-term rates in decades. Why? If you're new to the channel, welcome aboard. If you're a returning viewer, I appreciate your participation in our journey. And I just recently did a video talking about mortgage interest rates and where I see them going. And I've read your comments, and a lot of you think I've lost total credibility because interest rates in the next day went down significantly. And despite the fact we've just seen the stress test to our banking system fail, many folks believe that the Fed will change their policy and they won't be so aggressive in terms of raising the Fed funds rate. And just so you know, we're in the first inning of this recession. And there are still many people out there that don't even think that we are in a recession. Because up until recently, there hasn't been much pain. But over the course of the last 72 hours, there's been a lot of pain. There's been a lot of fear. And a lot of risks have been exposed that are inherent within the banking system. And I hate to break it to you, but what we've seen so far is cute. I suspect it's going to pale in comparison to the massive whopper that we're going to be exposed to, or the banks are going to be exposed to, when their toxic assets and their toxic balance sheets are revealed, or said differently, accounted for the right way. But to be clear, the markets, at least as of today, appear to be rallying, and mortgage interest rates appear to be decreasing, despite the fact that the Fed, Treasury, FDIC, backstop for Silicon Valley Bank and Signature Bank, financial markets are trading as if current events imply a sea of change for economic momentum, inflation, and the Fed rate hike trajectory. And so all the markets, with the exception of the Russell, are up and mortgage interest rates are down. And you can see in the chart that the Fed rate expectations by meeting month have all dropped. And you can see the massive day-to-day change in the 2-year Treasury yield, as well as the 10-year. So a reasonable person might imply that because we have had this break in the system, that the Fed is going to change their policy. And in the interim, in the volatility, traders are trading and they're making a fortune. But traders today assigned an 85% probability of a 25% point interest rate increase when the Federal Open Market Committee meets March 21st and March 22nd. But it's yet to be determined if that's true, but I don't think so, because Jerome Powell has told us exactly what he intends to do. Wall Street typically believes that the Fed will continue to raise interest rates until something breaks. And it would stand to reason that the second and third largest bank failure ever in the books happening just over the past few days, and the fear of contagion spreading, many folks would think that that qualifies as a significant breakage and reason for the central bank to hold off. But I don't think so, and neither does Quincy Crosby, Chief Global Strategist at LPL Financial. Is this enough to qualify as the kind of break that would have the Fed pivot? The market overall does not think so. And full disclosure, I've been wrong before. Goldman Sachs said today it does not expect the Fed to hike rates at all this month, but Bank of America and Citigroup both think we're going to see a quarter-point move. So we've got a mixed bag of opinions, and no one will know anything up until the Fed meets. And next week's meeting is a big one in that they'll not only make their decision on interest rates, but they'll also update their projections for the future, including the outlook for GDP, unemployment, and inflation. But for today, well, everything looks great. The markets are rallying, mortgage interest rates are dropping, and the future looks bright. The housing market is recession-proof up until it's not. And the banking system can be totally trusted up until it can't. And everybody feels safe and secure up until they don't. And to be totally clear, it's not like I'm rooting for any of these things to happen. I want mortgage rates to go down. I want the stock market to go higher. I want the banking system to be bulletproof. I want home values to increase. I want everybody to be able to afford their dream home and dream lifestyle. But I would be completely irresponsible if I didn't share what I see happening in real time because things are about to change in a very big way because the writing is on the wall. And just because something hasn't happened yet does not mean it's not going to happen. So you must be prepared. And if I can ever help in any way, please reach out directly. Now, I hope you found this content valuable, and if you did, please subscribe to the channel, give it a thumbs up, and check out my next video because I suspect you will love it a lot. And until next time,